Hi, I'm Cleon from ClearTax. In this video, I will tell you how to invest in mutual funds when the Sensex crosses the 50,000 mark. You may want to put money in equity funds that invest most of the assets in stocks. The BSE Sensex has crossed the 50,000 mark. You may feel that you have missed an opportunity to invest in equity funds. Should you invest in equity mutual funds right now, or wait for the stock markets to fall? Are equity mutual fund investors falling prey to the FOMO factor? You may consider the fear of missing out FOMO, which grips investors in equity funds. You could fall prey to FOMO when you have not invested in an equity fund or stock and its price starts running up in a short time. It may impact your decisions and you could suffer a loss in the stock market. You may consider ignoring the FOMO factor if you are new to equity funds. You must remember that 50,000 is just a number and you must avoid falling prey to your emotion. Invest in mutual funds depending on your investment objectives, time horizon and risk tolerance. How to invest in equity funds when the Sensex crosses 50,000? You may invest in equity funds through the systematic investment plan or SIP, even if the Sensex crosses 50,000. It's a way of putting money regularly in a mutual fund scheme of your choice. You may stagger your investment across all levels of the stock market and avoid timing the market. You could invest in equity funds either through SIP or a lump sum amount. However, you may invest in equity funds through the systematic investment plan when the Sensex has risen sharply. You will find the stock market expensive and you could stagger your investment in equity funds over some time. How to counter the FOMO factor? You could counter the FOMO factor with the right asset allocation to protect your investment. It keeps you safe from emotions such as the anxiety of missing out on a perceived opportunity to put money in equity funds. You could put money in equity funds through the SIP if you must increase your portfolio exposure to equities. However, it would help if you continue with your SIP in equity funds even when the Sensex is rising to achieve your financial goals. You must invest in equity funds only if you can stay invested for the long run. You may exit your equity funds only if they have underperformed compared to the benchmark index over some time. Review your portfolio once every 6 months to check if your investments match your financial goals and risk tolerance. Thanks for watching.